Today I want to talk about the secret off-exchange AMC transactions that are currently being investigated right now. And I also want to talk about some other side deals that have recently been made and how as a result the shorts are in trouble. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So Bloomberg recently posted this article saying that private funds' secretive side letter deals are targeted by the SEC. It says an SEC proposal on investment funds side deals on track to be enacted early next year as some institutional investors worried they'll lose a favourite negotiating tool. Now this article was posted December 19th, 2022, and therefore this new SEC ruling is expected sometime early this year. It's obviously going to eliminate the ability for hedge funds to make secret off-exchange transactions and secret side letter deals away from the public eye. It says the SEC's proposal would prohibit private investment funds giving side letters to chosen investors for preferential terms on cashing out or getting information about portfolio holdings or exposures. So as a prime example, we believe that Melvin Capital made a secret side letter deal with Citadel or another hedge fund to transfer over their AMC and GameStop short positions so they could cash out. This obviously enabled Melvin Capital to wind down their fund without properly closing out of their AMC and GameStop shorts, as they simply passed the short position onto another fund. So obviously Melvin Capital didn't close out of that position in the open market, and another fund didn't start a new position in the open market. Obviously there was a transfer of this short position off exchange under a secret side letter deal. It says that side agreements help private equity and hedge funds attract investors. Enacting the proposal as a rule would curtail competition among funds. Obviously, many hedge funds and institutions are saying these side letter deals and arrangements are needed to accommodate their particular needs and advance industry practices. It says that other terms, including those letting one investor redeem their interest in the fund early or more frequently than others, are banned entirely. Basically meaning these hedge funds won't be able to cash out their investments into other funds, and they won't be able to play past the parcel with these short positions. Now obviously if these hedge funds can't make these secretive side letter deals or these secretive off-exchange transactions, that would be very damning for these hedge funds and could potentially trigger the squeeze. We've known for a long time these hedge funds are doing secret off-exchange transactions, effectively playing past the parcel with their short positions, so when one hedge fund goes bankrupt, another hedge fund can take over that position. But it seems this new proposed ruling from the SEC could potentially eliminate that entirely. Now obviously I'm not saying that these new SEC regulations are guaranteed to go through, but I think if they did actually end up going through, there'd be some massive changes. We'd see a lot less volume through the dark pool, as obviously these hedge funds couldn't be making transactions in off-exchange venues or just off-exchange over-the-counter deals. We'd be seeing a much smaller percentage of overall daily volume being short volume and a lot less short exempt transactions. Overall, we'd be seeing a lot less AMC manipulation, as obviously the price wouldn't be manipulated by these off-exchange transactions, and everything would have to be done above board in the actual New York Stock Exchange. But speaking of other side deals and secret transactions, you may have seen this photo posted by Samantha. Now Samantha is a producer for Fox Business, and as you can see she's posted a nice photo wearing her very own Fox Business jacket. Obviously Samantha works for Fox Business, aka the mainstream media, but something I noticed that was very interesting is if we scroll over to the left hand side, we can see she's got her very own towel from Citadel Securities. Either her partner works directly for Citadel Securities or she's being treated to an all-exclusive golf day by none other than Citadel Securities. We know that Citadel and a number of other hedge funds do own massive stakes and massive holdings in these mainstream media firms, but it seems even that individual employees are being paid off by Citadel. And as I suggested in my video earlier, it seems these shorts are struggling and panicking even more. On the 30th, the short borrow fee had increased to 115.9%, but now as of January 2nd and again as of January 3rd today, that borrowing fee has increased to 138%. It seems the shorts day by day at this point are spending more and more money to continue to borrow and short AMC shares. And I don't think it will be long until we start seeing rates like this as posted by Mullen Automotive. You can see the short borrow fee on the 30th of December for Mullen was around 313%, but that's increased significantly as of yesterday the 2nd, up to 742%. Guys, if you didn't know, Moomoo is very easy to use, it's incredibly customizable, they don't engage in payment for order flow, and they have tons of technical indicators. And right now, when you sign up to Moomoo, you can currently receive 23 shares worth up to $2,000 each. That's a whopping total of up to $40,000. All you have to do is sign up to Moomoo using the link in the description below. And for the holiday period, Moomoo is currently holding a $60,000 giveaway sweepstake. Can you imagine the shorts paying 7 times their total short position simply in annual borrowing fees? That means for a short shorting $10 billion of AMC shares, they'd have to be paying $70 billion in annual shorting premiums, on top of holding at least $15 billion in actual collateral for that short. Now, I also saw this interesting article from The Street that said AMC stock is getting harder to borrow. Could short sellers be in trouble? It says borrow fees are mostly driven by supply and demand. The more short sellers that are interested in borrowing the stock, and the lower the availability of shares, the higher the fees. And the abrupt increase in AMC borrow fees can force short sellers to close out of their positions. I think if AMC especially starts seeing borrow rates around 742% or potentially even into the thousands, I do think we would see many shorts closing their positions as they wouldn't be able to support these borrowing fees. It says typically borrow fees range between 0.3% and 3% per year. However, when there's a high demand for a short sale target, it's not uncommon to see borrow fees exceeding 20% or potentially 130% or potentially 742%. It says when borrow fees jump dramatically, they can presage a short squeeze. Short sellers now losing lots of money due to sky-high borrow fees can be pressured to close their positions and realise any remaining profits, especially before other short sellers choose to do the same. This scramble to close out positions creates upward momentum on share price and can spur a squeeze. This also comes at a terrible time for these hedge funds, as the Wall Street Silver tweeted he believes that 2023 is going to be the year of Max Payne. This article said that Wall Street lost $18 trillion in the worst year for stocks since 2008, which was obviously 2022. Wall Street has lost $18 trillion already in total over the last 12 months, and therefore with these rising AMC borrowing costs, it wouldn't surprise me if we start seeing more and more hedge funds going bankrupt. Yes, right now many of these hedge funds are in profit currently on their short positions, but obviously can't close out without causing the squeeze, therefore they're stuck paying this annual borrowing fee. On top of that, they're losing more money on their overall long positions, as many of these funds are still long on the wider market, and it seems that wider market is set to resume the current market crash. As Wall Street Silver tweeted, he said the Federal Reserve reverse repos just skyrocketed, up $300 billion since yesterday to a new all-time high. We had previously seen the reverse repos hitting around 2.4 trillion, but over the last few weeks it had fallen back to 2.2 trillion. But on the 30th of December, we saw this rocket up to $2.55 trillion. Smashing the previous all-time high, a pip above 2.4 trillion. This clearly shows these hedge funds are struggling and are desperate to borrow money from the Fed. And on top of right now being a terrible time for these short sellers, it's actually a brilliant time for AMC. As Tony Denaro tweeted, he said Avatar: The Way of the Water is climbing in revenue faster than Top Gun: Maverick, and in a day or so, Avatar 2 will already surpass the entire worldwide box office revenue of Top Gun after only 3 weeks of release. Avatar so far has done $444 million at the domestic box office and $956 million at the international box office, leading to a total of $1.4 billion. Now, Top Gun in total only generated 1.487, nearly 1.45 billion, and therefore, in only a matter of a day or two, Avatar 2 will be overtaking. And as Suspended POS tweeted, he said Avatar 2 should easily reach $4 billion in total eventually. He said it's only been 2.5 weeks since release and is nearly at $1.5 billion worldwide already. He said imagine Avatar's total revenue in the next 6.5 months and how much AMC will profit as a result. And on top of that, as Suspended POS followed up, he said 6.5 months from right now will be in June. Ready for the June 2023 potential AMC run-up. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.